Welcome in to This Week in Bitcoin, episode 112. My name is Chris, ChrisLAS.com, JupiterBroadcasting.com. Bitcoin survived the strategy test this week. You know, the skeptics said that Bitcoin would collapse if Saylor stopped buying, to say nothing if he were to actually sell a serious amount. Well, I don't know if you were on social media, but some of us woke up to the news that a serious amount had indeed been sold. On Monday, we found out that Strategy sold 3,588 Bitcoin last week, around $216 million in U.S. greenbacks at the time. But the market mostly shrugged it off. Not only did the Bitcoin price go up while the sale was presumably happening last week, but after the initial news, the price went up again. Saylor made the news public, there was an initial reaction, and the news pumped. And I've noted that before, in a bad market, often good news like this just gets completely ignored, so I thought that was actually pretty notable. So what's going on? We're going to break kind of down what was going on there, where the positive bid was coming from. But before we get too far, I kind of do want to explain what's going on with Strategy and Saylor because it has become a drag on the Bitcoin market. I've kind of glanced around the issue. I've orbited around the issue, but I haven't really explained what's going on. And I've noted before on the show that when stuff is going bad for Bitcoin, you know, price-wise or narrative-wise, and then often things are also at the same time going bad for Strategy and the stock price and all of that, the interviews go from loving and he's such a genius, what a brilliant guy, to really pretty tough. And after weeks of Saylor being the main character of Bitcoin, he sat down for, I guess, what people are calling a firecracker of an interview with Channel 4.
They don't trust a company.
But you're a company. You're a company. You represent.
Are you going to keep interrupting me, or are you going to listen to the answer?
Michael Saylor is arguably the closest the community has to a celebrity. His real claim to fame came during COVID when he went all in on Bitcoin.
The idea of economic immortality or economic sovereignty so that your family is economically secure. That's a very compelling idea.
Immortality is very compelling for everybody.
Spiritual immortality is the basis of religion. Economic immortality is the basis of Bitcoin.
What happened last year? What happened with the price last year?
It goes up and it goes down, but it's irrelevant because the point is it's going up at double to triple the rate of the S&P over the long term because it's economically superior.
People shouldn't panic if it loses 50% of its value. Is that the crypto winter?
No, the right way to think of it is people shouldn't invest in a volatile capital asset. If you want to make a capital investment in anything, if you need the money in the next 4 months, you're a credit investor.
But all the risks. Well, I just want to.
If you're going to ask me the question, you got to listen to the answer. The point really is Bitcoin is the world's most secure digital property network. It's 21 million blocks. It's the cyber Manhattan. So all of the people in the world that would like to put their money in a bank in cyberspace, they don't trust the government. They don't trust a company.
But you're a company. You're a company. You represent.
Are you going to keep interrupting me, or are you going to listen to the answer? Even though 10 million companies will come and go, and 10 billion people will come and go in 500 years, and the Bitcoin still holds its economic value.
Well, unless quantum destroys that idea.
The entire quantum thesis is maybe someone will invent a better computer.
So before we get to
if you're going to ask me these questions, you cannot interrupt me.
Before we get
right, because it's like I'm not going to do this with you. Like you're being offensive right now to do this. Like it's literally a fantasy. You fantasize like the tooth fairy might actually come out of the clouds in 37 years with magical wands and wave them at you.
I hope she's not coming after my teeth.
And destroy your house. It's like, okay, yeah, well, maybe the tooth fairy will come. And
I do love his analogies. He has the best analogies in Bitcoin, you know, because he has it. He starts with the tooth fairy. Everybody loves a tooth fairy. and then he pivots. He just takes a slight pivot in a direction you don't see coming.
And destroy your house. It's like, okay, yeah, well, maybe the tooth fairy will come and dematerialize my house, but I'm still going to have the house because I don't really think it's that likely.
Is it the proletariat that benefits from Bitcoin's expanse, or is it people who have
Of course
very
it's
big
the
shares? People
Did I
like
not-
you.
Did I not just point out that I have 55 million beneficiaries? It's a technology, and right now it's touching 500 million people, but there's no reason why it shouldn't touch 5 billion people. Okay, we're done.
That was kind of a super clip because otherwise it would just be like 5 minutes, but that I thought was very interesting. Now, here's what's actually going on and why they had to sell and why I think you should probably brace yourself for the news that they're going to sell more Bitcoin. Lynn Alden's back. She breaks it down, and it's really about reserve management. It's not a thesis change. It's not about conviction change. Strategy hasn't changed their bullish outlook long-term on Bitcoin, but they have to keep a buffer for this perpetual that they have, for this dividend that they're paying out. It's not the issue is that we as a community, as Bitcoiners, is we have not made the transition that Strategy made a little while ago and didn't really make a big public announcement about a pivot. Lynn kind of explains it all. I'm doing a horrible job.
Lynn, thank you so much for joining us. Katie and I have been excited the whole show to chat with you. So we do know that Saylor really has this reputation of never ever sell. So when Strategy sells Bitcoin, how should investors interpret that? Is this business as usual, or is this a signal of something bigger?
So I thanks for having me. I interpret it as getting back to their prior guidance on their USD reserve. So if you recall, a couple quarters ago, they had a view that they were going to have 2 to 3 years of dollar reserves, which would give them kind of a volatility buffer to keep paying dividends on their securities without having to sell Bitcoin. And for a couple different reasons, they ended up dipping down to about 6 months, and that was at a time when there's leverage built on top of one of their most popular security other than their common stock, which is STRC. It had that large depeg moment going way below their target price. And since then, the company's come out with a board level decision to have at least 12 months of reserves, unless the board allows otherwise.
So they're trying to both look appealing to the S&P 500 for inclusion and calm the fears of investors that they have enough reserves to keep paying out on what is now a promised 12% dividend.
Currently, they're back up to 17 months. And recently, they announced that they were selling Bitcoin to pay some of their most recent dividends, which at least I interpret as not wanting to have their US dollar reserve dip again. So I think they're kind of rebuilding back to, we're going to see what the number actually is. But I think they're basically getting back to something more resembling their prior guidance from 6 months ago. And that includes being willing, clearly, to sell some Bitcoin when needed.
The product is the dividend. The dividend is backed by the cash reserve to give the market some calm. The product is no longer they're a Bitcoin treasury company that stacks unlimited Bitcoin. Now they're a company that stacks Bitcoin when they can and will sell that Bitcoin to maintain the primary product, which is that dividend product, that preferred. And, if they have to sell Bitcoin to do it, they will.
It's a small percentage of their stack.
Right. And Lynn, I want to talk about sort of the symbolic importance of Strategy, because I have a lot of folks from TradFi, and when it comes to crypto, all they want to talk about is what's going to happen to MicroStrategy. So,
this is why I say he's been the main character, because while as Bitcoiners, it's sort of noise to us. People that are big money sitting outside the market wanting to get in, they're trying to decide if they should wait for Strategy to get wrecked first. Because in their estimation, if Strategy gets wrecked, the price collapses. And then they get to lap up a scarce asset at just unbelievable fire sale prices. There's literally no reason for them not to wait because they're making money on the AI trade right now anyways. Now that's starting to play out for them a little bit, so they're starting to ask questions. These are real questions these people are asking. I know it seems obnoxious. At least it seems obnoxious to me, but they want to know if Strategy is going to get wrecked. And so that's one of the things they're doing, is signaling to the market here.
When it comes to crypto, all they want to talk about is what's going to happen to MicroStrategy. So, you just went into the details about, what some of their financing looks like at this moment. But when it comes to a sentiment perspective, when it comes to a signal perspective, how do you think about Strategy in the broader ecosystem?
Yeah, it's a good question. I mean, Strategy owns something like 4% of Bitcoin, so it's large. It's large in and of itself. I wouldn't call it systemic, but it's large. The chairman obviously is extremely well known in the space, and he's well known outside of the space to a significant degree. So the combination of the social reach with the scale involved, it's a very large.
Let's talk about that social reach, because that's a really nice way to put it. Saylor backed himself into this corner. He created this perception that you're seeing by the whales, and he created this backlash that you're seeing with the plebs. The reality is, sure, they could change their quote-unquote strategy, and the real product can become the preferred stock that they continuously promise a reserve for, and they can continue to buy Bitcoin when they can. That can be the product. That's fine. There's a it's a free market. Do whatever you want. But that's not what was promised to Bitcoiners.
And I refused to do it because a troll on Twitter said, hey, you said never sell your Bitcoin. Okay, fine. I'll destroy $100 billion company so that I don't sell my Bitcoin. Well, the point is, by the way, I said to you, never sell your Bitcoin. I never said that the company wouldn't sell his Bitcoin. So we're not going to be selling. We're going to be buying Bitcoin.
We're not going to be selling.
I just bought 1.1 billion of it, and I intend to hold it forever.
Forever.
But we're not going to sell our Bitcoin. You do not sell your Bitcoin. And anybody that's been listening to our earnings calls or reading our disclosures or has half a brain knows for the last 5 years, we've been very clear that, of course, we sell the Bitcoin if we have to.
Forever.
Yeah, okay. So I think, you can get hung up. Did he lie or not? Truth of the matter, he's the first guy doing something like this. So he's going to change. Things are going to change. And the incentives for them changed. Once you issue preferreds that forever start offering, a dividend, eventually there's going to be payment dates on that. And it's a real pressure point. So strategy went from never sell to strategic selling to defend that preferred. That's where we're at now. And they've tried to bump up that preferred dividend to 12% to make it enticing to those of you out there that maybe want to buy that instead of sats. And that's really the tell that it's under pressure too, by the way. And the reality is, unless that thing gets back up to its peg, their Bitcoin buying machine is off. The way their system works is once they go over the peg, they start buying Bitcoin. And when they're under the peg, they're probably going to be selling Bitcoin for a while. So a major buyer of Bitcoin is going to have to probably sit things out for a while.
Remain under pressure. I do think the recent actions buy them enough time. Clearly, strategy investors and the preferred investors liked it. We've seen the stretch preferred initially traded down to about $70 from $100 par.
Right.
And it's rallied back then. And so the market is supportive of these actions. It's easing fears of any sort of more cascading liquidations. And so we view that as a positive, adding a bit of surety to the market, but it could also impact Strategy's ability to acquire more Bitcoin in the second half of the year. If they're trying to really balance their cash reserves, they're now trading at a lower MNAV multiple. And again, so it may restrict their ability to issue shares and acquire more Bitcoin in the back half.
Yeah, and just to clarify, obviously to confirm what you just said, STRC, they need to defend that, $90 peg on that particular product. So it makes sense. Michael Saylor has talked to us about that before, the need to perhaps sell to, as a means to keep that level.
That's the new mission, to keep that peg and sell if they must. Because they're no longer just a buy and hold treasury company. They're a financial engineering company that has a financially engineered product they're selling. It's not a side quest. It is the product now. And I don't think our Bitcoin community has wrapped their head around it. They're just completely confused by the entire thing. So let me play one more Lynn clip as we kind of wrap this up. I think we're kind of where we need to be with this. But I think she's focused on the right thing through all of this. It's all about the reserves. They were getting low. She flagged it. It's uncomfortable. And I think her perspective is the right one.
I wasn't on that one, but when they were gathering questions, I did post and say, the reserve was 24 to 36 months. That was the prior guidance. And at the time, it was 18 months. So it had fallen somewhat below the prior guidance. My view was, is there updated guidance for what the reserve is going to be going forward? And then, kind of in the recent weeks, they got as low as 6 months of reserves. So I say that, that it's always easy to kind of be an armchair analyst on these things.
Mhm.
But from an investor perspective, you generally do want to see company give a guidance and then kind of generally stick to what they, guided that they're going to do. Generally, from an investor perspective, you don't want to see surprises. I mean, it's nice to see upside surprises, but you generally don't want to see downside surprises. Yeah, they got very low on reserves. Obviously, we had a Bitcoin bear market, and people did apparently build a lot of leverage on top of STRC. So they ran into a pretty big volatility event. I think the actions since then have been quite reasonable. So they've recommitted to building their reserve. They put kind of board level lines in the sand for how low that reserve can get without board approval. I think it's 12 months, and they're currently back up to 17 months of actual reserves. But that kind of board level, I think, is 12 months off the top of my head. They've put in facilities that allow for the repurchase.
Okay. So I think we've got it. This is what's going on. The strategy situation seems to be somewhat, I would say, stabilizing, and somewhat has killed the myth that Bitcoin's going to collapse without its ongoing buyer. Now, we'll see how that plays out over time. But let's talk about why we actually went up after it was announced that Saylor had sold. So what did change? Well, obviously, it wasn't Bitcoin. The macro headwinds stopped being a headwind for a moment. There was a weaker jobs print here in the United States, and we're in that twisted state of the economy where bad news for the average folks is good news for assets and the stock market, because the calculus is that with jobs being weaker, that gives the Fed room to cut rates. And if they cut rates, assets will pump. So it's these second order effects that they're immediately trading on, but that combined with at least the seemingly temporarily resolved situation with Iran and energy prices sort of resolved some of the macro headwinds that Bitcoin was facing. And it naturally started going back up. The buyers outweighed the sellers, even with Saylor selling over 3,000 Bitcoin. I think that's a really interesting note. It's without these pressures, Bitcoin just started ticking back up. But of course, these relief trades, especially when we're kind of in a bear market to begin with, they're just so easy to disrupt. And, well, disrupted, they have button.
The U.S. Treasury Department is revoking the general license that allowed for the sale of Iranian oil. Now, essentially, they're allowing for a 10-day wind-down period, but will be blocking any new transactions or any new sales of Iranian oil. And this comes just after 3 tankers were hit in the Strait of Hormuz earlier today. Qatar and Saudi Arabia, which had tankers hit, pointing the finger at Iran for those attacks. As for why the Trump administration now is taking this step, a U.S. official tells me this. They say, as President Trump and the administration have repeatedly affirmed, the MOU in effect with Iran is entirely performance-based.
Oh.
Iran will only reap benefits if they exhibit good behavior.
Oh, the MOU. You know, it's funny they use the term performance-based because the MOU felt performative.
Iran is entirely performance-based. Iran will only reap benefits if they exhibit good behavior. Iran's actions in the Strait were wholly unacceptable to the United States and will be met with consequences. Our negotiators continue to work in good faith.
All right, so met with consequences they have, and Bitcoin does not like this cocktail. We got a firm dollar. I talked about that last week, and now we have energy prices going up. Not good. The relief trade needed macro to just be quiet for a little while, just behave for a little while. And we got the exact opposite of that. The U.S. has indeed responded with counterstrikes.
We just got some news from U.S. Central Command on Iran. Forces have begun launching, U.S. forces, a series of what CENTCOM is describing as powerful strikes against Iran to impose, quote, heavy costs for targeting and attacking commercial shipping crewed by innocent civilians in an international waterway. CENTCOM goes on to say in this post on X, the U.S. strikes are in response to Iranian attacks on 3 commercial vessels that were transiting the Strait of Hormuz. Iran's demonstrated aggression was unwarranted, dangerous, and a clear violation of the ceasefire.
That doesn't sound good for passage through the Strait. And of course, if crude oil catches a bid, inflation expectations will turn back around just like they did when we got a weak jobs print. That's just they turn on a dime like that. And that matters for Bitcoin liquidity. And it's not really about Iran. It's about oil. It's about the dollar, and it's about what is the Fed going to do with rate cuts. Even though Bitcoin is a global asset, these things, because the U.S. market is so large, absolutely matters. And I don't think there's anything in this lineup that's coming to save Bitcoin. And the truth is, that's always how it has been.
Investors are going to watch these things, and especially certain companies have to watch the passage of this legislation. I don't think there's anything coming to save Bitcoin. I think Bitcoin has to kind of either its merits are going to be seen by the market, and it's going to be bought, by players in the market, and they're going to take advantage of cheap sats and a lot of the fast money washed out, and a lot of the parts of the ecosystem deleveraged, and then it'll climb its way up. And then once it starts climbing its way up, that of course gets outside money interested again. That's what makes it become fast money. Something's bottomed and rolling up. You get again the technical chartists that come in and say that's actually a pretty good chart. You get the momentum traders. You get the FOMO traders. And you get all the marketing around Bitcoin one day reclaiming 100K and then reclaiming all-time highs, and it just kind of feeds on itself. And until then, I think the asset just has to survive on its own merits.
Oh, we just were going to chop it out. But, it's fascinating because you have different perspectives out there. And let's go to Van Eck for a second, because it's the institutional version of the perspective. And I think that's likely the next big buyer. While Saylor sits it out, I think the institutions will step in and quietly snap up some Satoshis that he would otherwise have been buying and driving the price up. And they're not trying to buy every dip. And we're going to listen to Van Eck's chief analyst here, and he's going to kind of lay out the strategy. This is what he's advising his clients. They're looking at the overall market, and there's certain moments they're buying, but not the entire process. They're waiting for what they call a seller exhaustion use case, and they think it's starting to show up. And he thinks this is good news for his clients, and they've begun advising they buy some of these dips. I'm going to play this for you because I want you to put yourself in the mindset of somebody who's advising clients with multiple clients with millions and millions of dollars. You're responsible for multiple billions of dollars, tens of billions of dollars, and you've got to make a directional bet for these people. That's this guy's job.
What I've been telling clients is that you want to have your full position by October. We respect the 4-year cycle, and it's been one element in kind of not buying every dip in Bitcoin this year. And not to say we didn't buy some of these dips. The first time that Bitcoin hit 60K, we noticed some really one-sided positioning in the derivatives market. And then we got the bounce into the low 80s, ran right into the moving averages. And on this retest, there hasn't quite been the same type of capitulation signals in terms of liquidations or the premiums that people are paying for puts versus calls, and I think that the market noticed that. And while there was definitely a lot of bearishness, we didn't see that same type of capitulation. That said, puts are still really expensive versus calls by historical standards. We're seeing that like in the 80th percentile. So it not quite the 99th like we saw, the first time BTC hit 60K, but puts are expensive. Realized losses are in the 90th percentile historically. So people are dumping losses. So, there is maybe some hint of sellers exhaustion that may emerge here. And then we've also seen the older cohorts, kind of 2-year plus holders, have slowed down their selling. So that's another maybe hint of sellers exhaustion, and I think that's what's kind of leading to this Bitcoin bounce here in the latter half of the week. But I'm still kind of waiting and watching to get more aggressive. It really depends on your kind of individual positioning and risk reward. What I've been telling clients is that you want to have your full position by October. So, putting in some type of like time-based buying where you add a few basis points every month or so until we get into Q4. That seems like a reasonable strategy. I can't say I know exactly what's going to happen. But the fact that that the 4-year pattern matched up so well, like, you got to respect it a little bit.
There you go. Your top advice is DCA. That appears to be the advice from the top is, while we wait for this to work itself out, just DCA. So here's my question. Are you still a anti 4-year cycle or pro-year cycle person? Where are you on the 4-year cycle right now? In a way, I kind of hope the 4-year cycle is true, right? Because it at least gives us a light at the end of the tunnel. But when everybody starts landing on an October consensus, I start to get nervous. The reality is that so far, the 4-year cycle has kind of perfectly played out, but it's also perfectly lined up with macro events. We had the stablecoin DPEG last October, liquidated retail, flushed liquidity out of the crypto market. Then there was right along that same timeline, we had the AI capital vacuum. We now have the Iran war and a hawkish Fed, which was unexpected. And we're once again concerned about energy price spikes. And these have all been issues that kind of lined up right with things that line up with the 4-year cycle. So what's going on here? Is it the 4-year cycle? Is it macro events lining up in a 4-year cycle? What say you? Boost in and tell me. I'd love to know. Boost.jupiterbroadcasting.com. You can support the show and get your opinion in the next episode. You can support the show just by doing what you do. If you want to start buying sats on River, use my link in the show notes. It's a great way to stack sats in the U.S. If you're all about self-custody and you're in Canada or the U.S. check out the Bitcoin Well. They don't even host a wallet. It's all about self-custody. If it's time to spend some sats, you can go from Lightning to gift card in just seconds with a Bitcoin company. You can log in with Lightning, and the only thing they do is Bitcoin. They don't mess around with the other coins. Fold lets you passively stack sats while you're doing your day-to-day life stuff. Paying your bills, that kind of stuff. That's the Fold card. And they also now have a Visa that gives you sats backs on the purchases. Then there's Salt Lending. They'll give you access to your liquidity without having to sell your Bitcoin with some liquidation protections there too. And I'm adding a new one to the list. I'm officially adding Strike. You can use my Strike referral if you want to sign up for Strike, and I'll tell you why in the update section. They've got some big changes coming. So all of that's in the show notes in your podcast app or at thisweekinbitcoin.show, and you can support the show by doing what you do.
Score and 7 boosts to go.
We have some boosts to support the show. It's a summer episode, so I really wasn't sure if we were going to get much support because sometimes these can be a little tighter. People go on vacation and whatnot, forget about their This Week in Bitcoin podcast. But that is not the case. In fact, J-Cube comes in with a baller booster, 75,000 sats.
Hey, Rich Lobster!
Remind me, Clarity isn't really doing much for Bitcoiners, right? I had more to say, but it all sounded political. Ugh, I wish I could never live without fear of government overreach and control. Clarity doesn't do much for Bitcoin. The people out there, the analysts, the whatnot, say that the certainty that it would bring to the market would bring the money in that is kind of waiting on the sidelines for the rules of the road, and so Bitcoin would benefit from that. I think it's a stretch, man. I always have. I've never really cared about Clarity. Now they're saying they have a target date of August. Whatever. I was told it was going to be the 4th of July. I don't know, man. We've got the Genius Act. It's all just very tiring. And it's all just because they want to just do a bunch of S-coinery, I think. That's what I think. So J-Cube, I don't know how much it really has going for Bitcoin. Do I believe it could maybe bring a little additional money into the market? I do believe that is possibly true. I guess there's that. Thank you for the boost. Derivation Dingus is here with 45,334 Satoshis.
I hoard that which your kind covet.
He says, I couldn't agree more about the FOMC and the direction of the dollar. The way I see it, Lynn Alden's Nothing Stops This Train article on fiscal dominance from 2 to 3 years ago is still perfectly explaining everything going on. Raising rates helps when banks are lending too much. But when the problem is government spending, it just makes little sense. Raising rates into inflation caused by fuel shortages makes 0 sense. Also, I've been thinking about moving my IRAs. So when you recently reported on the Swan-related bad news, I decided to move to Unchained Capital. I got lucky and caught a 50% discount they were running, and I couldn't be happier. I love the collaborative custody model. I got lucky with Bitcoin price, and Swan doesn't support in-kind transfers, so I sold around 64K, and then the price dipped more, and I had to buy back at 58K. Hey, and I not to really, put shade on Swan. I think the folks over there probably have all the best of intentions. I think they've been dealt some bad cards. They were early. They had to partner with some bad folks. They kind of got screwed maybe a bit by Tether, it seems. It's just been rough for them, right? And so I think that's, Unchained seems like they've been pretty rock solid during all of that. Thanks for that update. Good to hear it. Derivation, appreciate that. Sasquatch is here with 25,353 Satoshis. He got 6, so he's late boosting. Man, I'm torn on the BIP 110 stuff. Jeff Booth is running knots, and then I switched back to feel creepy running core, so I'll probably switch again. I love Snart 9, but also MyNode and some others. Yeah, we'll have a BIP 10.1 update, BIP 110 update. It is fascinating to kind of see everybody just putting all of their cards on the table now. There's been a lot of narratives and a lot of reasons given and a lot of things that were claimed are not true that are turning out to be true. So we're going to talk about that later in the show. Thanks, Sasquatch. I appreciate it, and I know it's a rough place. It's worse than I think probably most people realize. And I'll talk more about it later. OB comes in with 21,000 sats.
Electricity, 21 gigawatts!
Just a hunch, BIP 110 will be a nothing burger. Yes, although what I'm going to get to is I do think it exposes something that's kind of systemic, and then additionally, will they actually just leave us alone? We'll see. Coming up, Code 27 comes in with the row of ducks. That's 2,222 Satoshis. No message, just value. I appreciate that. Lee is here with 5,000 sats.
Coming in hot with the boost.
No message, just value. Thank you very much. And Kiwi Bitcoin Guide is here with 4,567 Satoshis. Thanks for sharing your agent and node methodology. I kind of knew the answer wouldn't be something like put a few wrappers in place and let them loose. But I didn't think it'd actually be Nix, even though I know you talk about it all the time on Linux Unplugged. I guess it's another rabbit hole to discover. Here we go again. It does help. It helps a tremendous amount. And the reality is, I don't think Nix Bitcoin and Nix is for everyone. I wish I had a better recommendation, but I do think if you are seriously managing funds, if you are trying to deliver a certain level of service guarantee so your end user experience is good, right? Like if every time you guys boosted it failed, that would suck. You'd stop boosting. Then I do think it's worth considering Nix if you're putting it in production and you're serious about it. Or if you're even comfortable learning Nix. And the truth be told is, with LLMs, it's pretty easy to figure out Nix stuff. You can just take the error message from Nix and paste it into an LLM, and it'll tell you what you did wrong. Or you could even just run like OpenCode. So give it a shot, Kiwi. Let me know. Your inner child is here with 2,111 sats. Episode 111 makes the runtime of 111 minutes. What do you think of the idea of 2,000 plus the previous episode to get shout-outed? I'm boosting 211 just in case. Oh, I like this. So it's the episode number plus 2,000. It's a spicy meatball.
That's a spicy meatball!
I don't know if I'd remember it, so you're going to have to remind me. You'll have to boost in with 2112 sats and remind me, I think. You think I'm kidding, but I think I will forget. But thank you. I like that. Hey, Caspielan's back with 4,200 sats.
He's a good guy.
He's a real good
Oh, he
guy.
sent me some
No, he's a
value for
great
value
guy.
music. Thank you. I will review those. What apps or website do you use for value music? V4V Music, I think is what it's called, and Fountain. Those are really my two go-tos. And then sometimes I'll pop over to Wavelake and see what they got new and trending. WAVlake.com. Koss, it's nice to hear from you. Thanks for listening, and thanks for boosting. It's like hearing from an old friend. I love it. Hey, speaking of old friends, Oppie1984 is here with 4,080 Satoshis.
This is a tasty burger.
And he says, boost! Boost! Boost indeed. Thank you very much. Gene Bean's back with 5,781 sats. Regarding your system updates and agents using wrappers, I'm still unclear on how you keep your agents from doing things outside of what you've wrapped. They seem very determined to find ways at times. Yeah, that can be true. I don't really experience it. Once I've set up wrappers and skills and I've run through them a few times, like usually I'll do it with like GPT 5.5 or probably soon 5.6 as sort of a puppet master. And once I've done the cycle about 3 times, it catches the agent trying to do that kind of stuff. And that's always kind of been I build the skills, I build the wrappers. Of course, you got the Nix backing, and then I kind of run them through the puppet process a few times. If you're still finding issues, it might be the model. That's always possible. He says, I'm like PJ, while I wait for the price to go up again, I'm enjoying the extra ability to stack at a discount. Amen to that, brother. And just an extra boost since I didn't hit send last week. Thanks, Gene. Appreciate you. Ace Ackerman's back with a row of ducks. I think strategy will be fine, and the markets are in the process of betting Saylor's vision of digital credit. The biggest factor in Bitcoin's price is now the flow of money in or out of the ETFs. Unfortunately, not what Bitcoin represents. Yeah, Ace. In fact, I meant to make that mention, is the ETFs are really driving things. When we saw the macro conditions cool for a bit, even while Saylor was selling, it was the ETFs where the main source of buying, and of course the DCA plebs. But it wasn't like another treasury company stepping in for Saylor or a nation state. It was the ETFs, which are a mix of everybody. And I think, Ace, here's such a good point that I should have made earlier, so thank you for bringing that up. And so one of the things it seems like is you can kind of tell the direction Bitcoin's going by watching the direction the ETF flows are going. The harder the flow out, the harder the Bitcoin's going to slide. The stronger the flows in, the more the Bitcoin's going to pump. And there are a couple of APIs out there you can point your agent at, but not a lot. But there are a couple you can point your agent at, and then, ask it how the ETFs are doing, and it'll just give you a nice summary. Not that I do that, Ace, but I'm just saying you can.
The traders love the vol.
Good to hear from you. Dash Dummies here with 1, 2, 3, 4, 5 Satoshis. That's a Spaceball boost.
So the combination is 1, 2, 3, 4, 5.
Episode 109 mentioned ETFs as a boomer thing. I'm in the UK and I'm considering using the strategy ETF inside stocks and shares. ISA tax free to generate yield without touching my main Bitcoin stack. Keep liquidity if needed. Too risky? Thoughts? I mean, my advice would always be try it with the amount of money you're comfortable not putting into Bitcoin. That said, when I say that they're a boomer product, I kind of tease because you could see a world where if loan products or something like that or lines of credit got really compelling with ETFs and you could swap Bitcoin into an ETF and leverage that in a way that was safe and you weren't going to get wrecked and then swap back to Satoshis. I mean, even people like me might take advantage of that when the business needs it or something like that. So it's all about your risk profile and the amount of money you're willing to not put into Bitcoin. A lot of people say it's the amount of money you're willing to lose. I think it's a different perspective. It's what is the amount of money you're not willing to put into Bitcoin, and will it do better than Bitcoin? It might. I mean, recently it might have. Traditionally, no. And every time I've sat down with somebody and we've put everything out on the chart and we've looked at it, it's okay, if you would have put your money here, you would have put your money here, you would have put your money here, inevitably it performs best in Bitcoin over a 5 to 10 year period. Maybe AI continues to be a liquidity suck and that money goes in other places of the market, but it's hard to say. But Dash Dummy, I think it's not a foolish question, and I think it's worth experimenting with personally. I'd like to know how it goes for you. But be sure you can tolerate that risk and not putting it into Bitcoin. Good question. Thanks for the boost. Mix is here with 3,333 Satoshis.
I like you. You're a hot ticket.
No message, just value. Thank you very much. Appreciate that. Love Down Baby On comes in with 2,000 sats.
I don't understand what the heck is going on here.
We could call him Tim. He says, you may remember me as Sir Lurks a lot. Oh!
Coming in hot with the boost.
It's Lurks. You've been an inspiration. Okay, come on. Love Down Babylon is the name of my own Value for Value podcast, which I'll be releasing soon. Babylon is in the ancient city where the Jews were held captive. Rastafarius uses Babylon to mean the dominant culture of control and separation, the ills of our modern dystopia, the prison of mental slavery, the Matrix. My podcast is an attempt to share my journey out of my own mental slavery. I got cut off there, but I'll plug the podcast one more time. It is Love Down Babylon. It'll be a Value for Value podcast by Sir Lurks, a.k.a. Tim, artist formerly known as Sir Lurks a lot. Lurks, it was good to hear from you. Thank you very much. And best of luck with the new podcast. Nakamoto 6102 is here with 15,864 sats.
This
is the way.
When I hear Saylor explain MSTR or strike, it just goes over my head. It served me well to only invest in things that I understand. I just keep stacking sats into cold storage. Thanks for the value. Nakamoto, that's such a wise, I believe, thing. It's like the nice thing about Bitcoin as its core simplicity is you buy the Satoshis, you eventually put them in cold storage, and you shut up and you just sit on them. And you don't have to worry about fiat games in the stock market or 401k stuff. It's like you just put them in there and you just let the government debase the currency. The natural process that they're engaging in. And you don't have to do this gambling and this betting. And it does mean in periods like right now, in the short term, we don't make as much as maybe we could have, but we're betting on the long term that this thing's going to rip. And the reality is it's simpler. It's less stress. It's less to think about. And there's so much to think about these days. Savings shouldn't be complicated. You should buy the sats, eventually put them in cold storage, and shut up. It's really simple. So when I think about buying stocks and getting dividends and putting things into things that give me some sort of yield, all that sounds appealing, but it sounds complicated and risky, and I don't really understand how it works. And I understand how Bitcoin works. So I think you nailed it, Nakamoto. Great boost. Thank you very much for boosting that in. Keep that wisdom coming. That's the kind of stuff I love.
Thank you for helping us help you help us all.
Hey, Adversary 17's here with 8,192 Satoshis.
10 gold blooms out of a possible 10 gold blooms.
I'll take some Saylor stats. Yes, strategy selling is good, along with all the other whales out there, because it means more sats for me. Yes, to cheap sats. +1 also to a NixOS node. I don't feel like I ever have to worry about doing updates on my server anymore. It is really nice. I think if the world understood, it would be the way all computers are. Thanks, adversaries. Appreciate you. It's always good to hear from you. All right, our next boost is User54 with 10,000 sats. No message, just value. Thank you very much. And then we got Sleets Stacks Sats coming in with 8,888 sats. That was the magic number of the week, 8,888. Speaking of incorporating Bitcoin into farming, I have an Antminer S9 that works fantastic as a 650-watt space heater while earning around 375 sats per day through Brainspool. I also have a dozen chickens. I've thought about combining the two and keeping my chickens happier during the winter. I also will get Wi-Fi out. I'd have to get Wi-Fi out in the coop. Well, yes, it's worth it. As somebody who put Wi-Fi out in his coop, let me tell you, it's worth it, because then you can also put cameras and sensors out there. Worth it. Also, I'd like to know how you get it at 650 watts and how loud it is, and if it would be too loud, because I'm also going to have to heat the hen house. I don't have a lot of power out in that area, but I might be able to get 500-600 watts in that area. And then if there was a way to duct that miner into the hen house, why not? If I'm going to be running 700 watts for heat anyways, why not? As long as the heat wasn't too much. You know what I mean? Let me know what you think, Sleets. Is that how I say it? Sleets? S-L-E. Sleeze? Sleeze. Sleeze. I don't know. Slee Stacker. Slee Stacker. That's it. Slee. Yeah? Haha. I'm going to get it.
You make me want to be a better man.
You keep boosting it and I'll have to get it right. You know what I mean?
But that's not possible. Nothing can do that.
Come on now. All right. Clear the gates. We've got a little royalty here. Pew, pew, pew. Member boost from King Arthur coming in. And he's giving us the Holy Grail grenade clip. Whenever Bitcoin goes, we will follow Chris. Wherever it goes, be it BIP 110, 150, or 1500. As long as you accept sats for interaction and we're alive, your true fans will follow. And King Arthur did the right thing. He sent me the time code of the YouTube clip that he was thinking of for the King Arthur boost, and I will play it now.
1, 2, 5. Lisa, 3.
Solid choice. I think that's very solid. I will try to remember to clip that. It's a little long, but it's pretty solid. Thank you, King Arthur. Appreciate you being a member. Thank you, everybody who boosted the show. Really. I mean, I put it out there for free. You would not believe the amount of time I work on it. And, I'm not complaining, because I would rather do this than anything else in the world. but I very much appreciate that some of you do find value in it and recognize the hard work that goes into it. So thank you, everybody who's either a member on Fountain or Jupiter Party, or those of you who boosted this week. Let's total it all up. So when we look at our stream stats, those of you with the Podcasting 2.0 app that just streamed the stats as you listened, 28 of you out there. And really not too bad. Collectively, you sat streamers stacked 64,901 Satoshis. Not too shabby, thank you very much. When you combine that with our Fiat Fun coupon, I don't think we got any fun Fiat Fun. It was all Satoshis this week. We had one free member boost, and the rest was all sats. We stacked a grand total of 364 Satoshis, 364,000, I should say, 295 Satoshers. Oh! Yeah, boost.jupiterbroadcasting.com is the way to do it, or with a Podcasting 2.0 app. I think that's the first week since we launched the web boost that it was all sats still. Nobody Fiat Fun coupon. You know, the Twib audience, you guys. You guys are so hardcore. So thank you very much. Appreciate you for supporting this, and you can do it real easy these days. Real easy. If you haven't tried it out, go check it out. We built that. It's sitting on top of the Lightning Network and the Podcasting 2.0 standard spec using all open source and Lightning on the back end. It's pretty rad. I'm kind of proud of it. Well, how about some updates? Quick quantum update for you. Blockstream Research has been working on a post-quantum signature opcode for Bitcoin. It'll be opt-in, because it will be larger signatures. But it'll be opt-in, so not everybody will have to do it. And Blockstream claims that it has been optimized for performance up to 3 transactions a second with 580 byte signatures. Now, that is actually still well ahead of its heavier NIST alternatives. By at least Blockstream's framing, this is still the more performant alternative.
For ourselves, at Blockstream, we have a research team that's been working on quantum for over a year now, and we have a number of papers and a specific proposal for a Bitcoin-optimized version of the NIST standard, which was released in October 2024, so quite recently. I think that's a reasonable path for Bitcoin to add another signature scheme. It already did add one in 2021, so there's a precedent, and that would then be an opt-in way for people to be quantum ready without paying the cost of the big signatures today. So I think that's important because you don't want people to have a kind of cost deterrent from adoption. Then hopefully we can get a visibility in the market of how many people are ready and adapt from that in the future if the rate of hardware progress speeds up.
I like to see them cook. Let Blockstream cook, and they've got the Liquid network to experiment things on, and they've got the engineering talent to know what the hell they're doing. So I'm going to keep an eye on that for you. Now I want to switch gears. Jack Mallers of Strike made a pretty big announcement this week. Strike announced what they are calling volatility-proof loans. Loans that don't get liquidated regardless of how low the Bitcoin price goes. So for some context, here's how loans, basically all Bitcoin-backed loans, but loans on Strike typically work.
LTV at 65%, we start issuing our customers a warning. Hey, here's a push notification, an email, pick up the phone, give you guys a call, let you know where your loan stands. At an LTV of 70%, we issue...
Just to make it clear, LTV would be like, I think it's a loan to value, or it's a ratio of the amount of Bitcoin you have and the value of your loan. So they want often to see 50% more Bitcoin collateral than the loan's for. So if you're going to get a $5,000 loan, you have to put down $10,000 of Bitcoin. And then the amount, that ratio of the collateral to the amount of your loan, especially when Bitcoin price is going down, is called your LTV.
Give you guys a call, let you know where your loan stands. At an LTV of 70%, we issue our first margin call, where we give you 72 hours, that's 3 full days, to act. That could pay down the loan a little bit, add some more Bitcoin as collateral, and just get yourself into a good standing. Let us know that you're aware and you're addressing your loan. At an LTV of 85%, we have no choice but to start to partially sell some of the collateral to get you back in good standing. Now, I think we do this best in the industry because we do not sell all of your Bitcoin. We would not do that. We don't want to do that. We care too much about you guys. But what we have to do is at that LTV threshold, we start to sell little amounts to get you back into these healthier LTVs. And that's how our product traditionally has worked up until this point.
Yeah, and that's pretty much how all Bitcoin-backed loans work. Strike has a pretty good plan in the sense that they do give you that 3-day notice, and they kind of have different thresholds, and then they do only liquidate as much as they have to. There's various different policies there for the different lenders, and the DeFi programs sometimes just automatically liquidate as soon as a price point is hit, et cetera, et cetera. But that's how the strike ones work traditionally, is when the price of Bitcoin dropped, when you no longer had the collateral to cover your loan, you had a few days to get more Bitcoin in there or pay off the amount of your loan that you need to pay off. They're changing that now with what they call a volatility-free loan. And Jack introduces that here.
Just solve it. Introducing volatility-proof loans, a Bitcoin-backed loan that a price move can never trigger liquidation of your collateral. No warnings, no margin calls, no automatic sell-off. I'm telling you guys, this is not a drill. You're hearing me correctly. So, to make it very clear, there's no price move that can trigger a liquidation. So, as I have in this visual, the Bitcoin price moves every day. It can go up 300% in a year, but then it goes down 50%, 80%. Obviously, the trajectory is up, but that level of volatility when you have a Bitcoin-backed loan is the biggest amount of feedback we've gotten. If you open a volatility-proof loan, the Bitcoin never moves. I'm going to say that again. It never moves. We don't care what the price is. We don't care the wick down. We don't care the LTV. You're good. You're good. When you get a volatility-proof loan, we have your back. No warnings, no margin calls, no liquidations. You sleep well at night.
Now, it almost sounds too good to be true. So how can they do this? Well, for one thing, it is going to cost you more.
At night. Now, how does it compare in the other capacities? The maximum initial LTV is 45%, not 50%. That's marginal, but I want to point it out. Transparency, transparency, transparency. The terms, we're going to start this out at only a 6-month term. Now, this is the first product of its kind to market, accessible to everyone in an app. It's really, really innovative. It's very, very new. So don't hold me to all of this. I'd love to offer a 6-year volatility-proof loan, and I think someday we will be able to get there. But for now, the term is 6 months on a volatility-proof loan. We have to charge more for this. The secret sauce is that we're taking the extra charge that we're giving you guys and we're putting on hedges in the market to protect all of us. Okay? So it's very sophisticated. It's not easy. It's very difficult actually, but of course it is worth it. But it has to be more expensive. So we add 2.95% to your rate. Now, our standard loans start at 7.75%. So for me, I think Bitcoin is going to outperform 7.75 to 11.25%, even if you add 2 to 3% on top of that. I love the pricing. I'm a customer of the product. I think it's great, but you guys should know that the protection isn't free. And then as far as retrieval of the collateral, our standard loan, we allow you to take the Bitcoin back if the price appreciates. Let's say you open a 50% LTV loan and Bitcoin quadruples to new all-time highs and we're in a euphoric bull run. We don't want all of that collateral. Feel free to take some back. We just want the minimum to collateralize the loan we gave you. There is no collateral retrieval for volatility-proof loans, at least not yet. So I want to be very clear about the trade-offs. But if you're okay with a slightly shorter term and a little bit higher of a fee, there is no price move that can liquidate you. So just to reiterate, this is the price of protection. The term 6 months, the lower maximum starting LTV, the slightly higher rate, and the fact that during that 6 months, we don't want you to come and pull the collateral Bitcoin back out. And this is all for now. Let us launch it. Let us build our feet here. But we've been testing the product internally. It's unbelievable. I'm very proud of the team. I think this is truly innovative and a sign of the times of where all of these features and tools are going.
I do think it's a great product. I mean, the 6-month term is too short for me. But, maybe if you time it right, it could be just fine for some people. But as he said, this is a version 1, and I'm going to keep my eye on it. But I like where they're going now with the line of credit, the bill pay, the standard loan, and now the volatility-proof loan. Plus, they just have a pretty good general app interface and all that, and they have excellent Lightning Network support. I'm not I've sort of hesitated on my support of Strike, but over the years, I've just seen them continue to deliver on what they say they're going to do. So for right now, I'm a fan of where they're at, and I like the way they're rolling this stuff out. And they just seem like they stay heads down and they just keep working on it and keep building and producing the stuff that their customers are asking for. Now, in the category of a thing that nobody asked for, let's do a BIP 110 update, or of course, the reduced data temporary soft fork, which is promised to limit transaction data by disabling certain opcodes in order to eliminate certain types of spam. At least that's what we were told. And then we're told it's not about spam. Until then, we're told it's about spam again. I've been going back and forth with people, and I find that to be exhausting. But I do have a few BIP 110 updates for you. So we're about 30 days out from BIP 110 activating. Very exciting. And this week, the Ordinals community announced that they were now BIP 110 compatible. Yes, friends, Ordinals are now BIP 110 ready. Looking right here at the GitHub, the issue is ready to go. The work is done. They write, this PR adds an alternative inscription envelope. This allows them to push inscriptions and ordinals into the BIP 110 network. And they say right here, looks good to me. Let's wait until BIP 110 activates to merge this. So, once again, proving that BIP 110 will never stop spam. There's also a group of people that are organizing a massive spam plan for the BIP 110 chain once it goes live and loading it up with crap. It turns out that BIP 110 makes ordinals less than 1% more expensive while also breaking generic miniscript support. So the big problem that BIP 110 has right now is besides less than about 20% node adoption, they have around 1% miner adoption. But Ocean, they have a plan to tip the scales.
Hi everyone, I'm Marco Timko, president and co-founder of Ocean. Over the past several weeks, we've seen a strong uptick in interest from miners looking for a simple way to express their support for BIP 110. We've listened, and today we're launching a second Stratum endpoint for BIP 110 signaling. Up until now, Datum has been the primary mechanism for block construction and optional signaling on Ocean. Datum gives miners full control over how blocks are built and whether or not they choose to include signaling in the blocks they find. This update simply adds another option for miners who need a dedicated endpoint for signaling. At Ocean, we believe miner sovereignty is essential to Bitcoin's long-term success. Miners should have a voice, and we're building the tools to give them one. Thank you.
Yes, part of what gets me about it is the way they phrase it. So it's manipulative. Because the default will now be that you signal for BIP 110 unless you use the non-default endpoint. Well, how many miners are following social media that are going to catch this little nuance? How many people that signed up for Ocean because they believed in the promise of decentralizing and helping what people perceived was the actual threat, which was centralization of mining and hash rate. So they sign up for Ocean believing that they're taking a stand against that they're decentralizing the hash rate, only to have Ocean turn on them to be a political actor, and now, by default, make their mining signal for BIP 110, unless people go in and change their configuration. And this has been a very tidy little coordination, because you've got Start9 on the node side, using the ideals of Bitcoin to sell the Start9 node and hardware. And they're now the primary source of the plebs running NOTS nodes and signaling BIP 110. They also made it super easy to spin up a bunch of sock nodes on Tor to inflate the numbers of support for BIP 110, making Start9 a political actor and pushing people towards NOTS and BIP 110. And then you have Ocean, who promised to save us from centralized mining, flipping on the signal for BIP 110 by default. Again, another abuse of power and political action. The real irony was that I wanted to put my mining hash rate into Ocean. That's where I wanted to put my hash rate. And for BIP 110 to be successful, they're going to need a lot more NOTS nodes. That would effectively centralize Bitcoin around Luke Dasher. And Ocean, who employs Bitcoin Mechanic, who has been one of the loudest advocates for BIP 110, is the head of communications for Ocean, all very tidy there. And then you have Start9 no doubt benefiting from their besties running the Bitcoin network. So you will have Luke running the node, Start9 running the deployment for the end users, and Ocean that's signaling BIP 110. They're trying to centralize power. It won't work. It's kind of pathetic, but it's obvious what's happening. And the plebs out there, they want this because it feels good. It looks like the right thing. They want to make Bitcoin hard money, and everybody agrees with that. We want Bitcoin to be the hardest money in the world. It is the hardest money in the world, and we don't want it to be filled with spam. But it's not being filled with spam. There is an economic system to sort that out. And right now it's telling us it's not a problem. Transaction fees are 1 sat right now for a high-speed transaction or a medium speed. Like, they're just 1 sat per VByte right now. Just doesn't matter what you want to do or how much you want to send. It's cheap. And that's telling us, that's a signal. And it's been cheap for a couple of years now. The plebs want this when these people have a clear incentive to centralize control around Bitcoin. And then you have an audience-captured boomer on YouTube that's telling them this is great. And I believe, watching this, Bitcoin's greatest threat is not BlackRock. It's not Western governments getting their fiscal house in order and finding the hard money standard once again, reducing the need for Bitcoin. It's the ignorance and lack of faith of Bitcoin's own users. The people who constantly think they know better than Satoshi. The people who want to save Bitcoin. You're the problem. Your ego's the problem. You're the problem. And, amazingly, some of these BIP 110 supporters, most of them won't admit that it centralizes control around Luke and Ocean and all of that. But some of them do. They're not that dumb. They realize what's going on here. And they like the idea. I'm not making this up. They realize it would effectively put Luke in control of Bitcoin, and they think that's just great because, after all, Linux has Linus, and that's worked out just great. This is a post by Robert Allen, hashtag BIP110, at Satoshi Sound on X. Very long post. I think it's funny in here because the person he wants to put in control of Bitcoin, he writes, "I've never met Luke in person, but I have engaged with him online. He strikes me as both highly intelligent and highly autistic." Yeah, because they've debated religion online. Super productive work there. It's a very long post, but here's his rationale for why Bitcoin needs a benevolent dictator. He says, "We already have a solo gatekeeper experiment for 3 decades. We've seen it. It's called Linux. Linus Torvalds has been the benevolent dictator of the most important open source project on Earth since 1991. The kernel he gatekeeps runs much of the internet, every Android phone, and, with some irony, many of the machines Bitcoin nodes run on. Single gatekeeper review is not an exotic risk. It's a governance model of the most successful software project in history. And then, don't worry, guys, because Luke says once he does have total control and power, because even Luke realizes where this is going, he's going to give it up. Just trust him." This is what he writes. "Third, most important, the king is disciplined by exit. Here's Luke himself on Knots, gaining node share. Quote," and this is a Luke quote, "and Knots can lose it just as fast if we do something truly insane. What we need next, as soon as we get through BIP 110's activation, is a real alternative so users have options." So just once they get through BIP 110, Luke's going to really encourage somebody else to make a competitor to his node project that would reduce his power and influence over the chain he just successfully got control over. Just trust him, guys. And then it's obvious, right? Because he writes here, "The man accused of seeking the throne is publicly asking for more competitors." Well, just trust him. Robert Allen represents a type of thinking around BIP 110 that seems to wholly miss the value of Bitcoin. Could you imagine if we went from having no leader and no central boss to having King Luke? And how devastating that would be for Bitcoin? And these people, these BIP 110 supporters, are writing these long soliloquies on why Luke would be a great Linus for Bitcoin. I can't believe I have to say this, but there are differences between Bitcoin and Linux. First of all, Linus created Linux. Luke did not create Linux. Luke is not Satoshi Nakamoto. Linux is Linus's project. Always has been. Linus didn't step away. Linux is not a monetary asset, it's a software project. Linux has an ecosystem that is valuable around it. Linux itself is not an asset worth trillions of dollars. The dynamics around the control and the decentralized nature of that are a lot different than an open source project that's primarily used on servers and mobile devices. Okay? They're not apples and oranges. Or they are. It's like comparing apples and oranges. You're not comparing apples to apples here. Linus has a united federation of planet-sized developer team beneath him that grows every single kernel release by the thousands. Knots has Luke. Luke's the central gatekeeper of Knots. He is the dictator. He's not a benevolent dictator. He is the dictator. There is not a similarity between Linux and Bitcoin in that regard. Yes, they are both open source. Yes, they're going to change the world. They both are. That's about it right there. Like, this kind of thinking is sick. It's ego-infected thinking. The BIP 110 supporters are fueled by feels and dreams to save Bitcoin. And in doing so, they assert they know more about what is best for your private property, your personal property. They know better. That's what they're asserting. They know better than you do. And you're just a fool if you don't agree with them, or you're a pedo, or all kinds of accusations. And all of them have forgotten the humble part of the stay humble and stack sats. They've all forgotten the humble part. The golden rule of holding Bitcoin is Bitcoin changes you. You do not change Bitcoin. And seems like even some long-timers are going to have to learn that lesson the hard way. All right, let's wrap up with something quick here. Just a couple of quick hits. I want to cover the Texas Stock Exchange because something is quietly shifting on Wall Street. And Bitcoiners, we should keep an eye on these things. So I want to bring you up to speed.
Chino, move over, New York City. Right now, we're taking a live look at downtown Dallas. Today, the Texas Stock Exchange launches trading. The exchange is the most well-funded challenge to the New York Stock Exchange and the NASDAQ. KB's Allison Martinez joins us from the newsroom to explain when you can start trading. Fill us in, Allison.
Yvonne, good morning. Governor Abbott says Texas has become the 8th largest economy in the world. Today, Dallas is officially throwing its hat in the ring to become a major financial hub. The real test begins today as the Texas Stock Exchange commences trading. The Texas Stock Exchange is a Dallas-based startup. A phased rollout starts today and will continue over the course of July.
Now, here's why I think this matters to Bitcoiners. My gut tells me this is going to be a hotbed of real-world assets, blockchain shenanigans, and pushing for 24/7 trading of typical assets that are closed on holidays and weekends. That's where a lot of this is going to be coming. I think that's kind of the reason why the people behind this put this thing together, is to push some of this stuff forward. And so I suspect there's going to be a lot of noise that comes out of this. A lot of stuff that's going to be scammy, and, you know, I think that the real world assets are going to be selling a lot of crap. So the same skills we use today are going to apply when this happens. You're going to have to watch for the signal and the noise and, you know, stack sats, right? Just stay humble, keep stacking, and don't get distracted by whatever products this Texas exchange is going to come out with, because they're going to compete. They're going to compete hard, and they're going to try to go for as modern as possible. And now we're going to wrap up with a little bullish sentiment. As you know, when the price even takes like a 1% dip, I pointed out the media really questions the fundamental use case of Bitcoin. If it's been a big pump and dump all along, if it's now going to zero, it's hilarious. And this week, $383 million Miller Value Partners, Bill Miller, explained to the short-term thinkers over at CNBC what the real deal is.
Bitcoin's higher today, but it has been a brutal run for the cryptocurrency. It's around 50% now off its all-time highs. For more on where it might head from here, we're joined now by Bill Miller IV. He's Miller Value Partners CIO and Chairman. Welcome back.
Thanks for having me, Scott.
Why is Bitcoin performing so poorly?
I think the main reason right now is the fact that Clarity Act looked like it could be stalling on ethics concerns. But you look at it over a much longer time horizon, the fundamental case for Bitcoin has never been stronger. So the CBO this year is projecting $1.9 trillion in a deficit. So let's look at that from a different angle. The marginal obligations being created that are unfunded by our country is 50% bigger than the entire market cap of Bitcoin. So you have to think, is this the best way of accounting for capital when we can just come up with new obligations year in and year out? The debt cycle gets worse and worse. I think there are better ways to account for capital that are based on consensus, energy, and transparency. So we're still very optimistic about the technology over the long term.
I know, but I didn't hear you say anything about the use case of it. I mean, what if there was never really a credible fundamental story to begin with?
Well, then it might not exist, right? So Bitcoin came into existence in the heels of the 2008, 2009 financial crisis, when everyone saw all of the money printing coming down the pike. And that's what happened. So the fundamental use case is stronger, and you have to look at the underlying sets of dynamics out there around you when you make market calls. And so, the fundamentals are still incredibly strong.
What if the biggest problem here is it's simple, and that there's just a lot of money going into other more durable, fast-growing areas of the market around the AI trade, and Bitcoin just can't compete with that?
Well, I think AI, very, very long-term, is incredibly deflationary. And to make up for that, you're going to have to come up with a whole bunch more dollars to fill in for all the debts that are out there. So one of the ways out of the debt spiral is inflation. And Bitcoin is a hedge against that over the long term. So I think overall, that's a very good thing over the long term for Bitcoin.
All right, let's check in on the state of the network, wrapping up at block height 957,221. The current U.S. price to one Bitcoin, 62,130 U.S. greenbacks. That puts our sats per dollar at 1,610 satoshis for $1 US. We are down 50.8% from our all-time high of $126,180 275 days ago, October 6, 2025. Our retarget date for the difficulty is July 11th, with a current downward adjustment of 3.3%, and the reachable Bitcoin nodes on the network suspiciously continues to grow week by week. I don't know, this number's odd. It's fluctuating in a way that I find suspicious. 27,069 nodes on the network at the moment. Our 24-hour price change is down 2.5%. Our 7-day, though, still up 3.8%. 3.8% since our last show. Immediate transaction fee, 1 sat per VByte. It's cheap. Rebalance, move stuff around, consolidate. State of the network's great. It's a great time to do it. And look at that. 957. That's a great block height to wrap up on. Well, if you made it this far, you probably ought to check out the links in the show notes at thisweekinbitcoin.show. My goal here is to give you a show that doesn't get distracted by the politics or the emotions or the games, any of that, but focuses on the signal so you can plan for yourself, your friends, your family, your future, whatever it might be. So you can always let me know how I did with a boost.jupiterbroadcasting.com. I also want to hear your take on the 4-year cycle. Yes, it's still a topic, and I want to hear it. I want to hear your updated 4-year cycle take. So boost that in. Also, any thoughts you have on Saylor as well. I am going to leave you with a value for value track, but I want to give you right now a language warning. There is some swearing in this track. So if you have young ones that are sensitive to that, you can turn it off here in just a moment. But there's your warning for that. It just, to me, felt like this track was too perfect. It's right on theme after our BIP 110 update. So I had to play it. All right. I'll see you next week for your value for value track. It is Off the Chain by Neon Rooks.
I didn't want to have to do this, but don't fuck with my money. You want it off the chain? It's off the chain. You want it off the chain? It's off the chain. Bitcoin is money. We want the same thing. Zero tolerance for shit coiners, can't believe I gotta say it. After how many years, this is how you wanna play it. Fuck around with consensus, get yourself burnt. Telling Twitter lies just to get the plebs hurt. Talking about renting hash just to up your net worth. What you mean Bitcoin is dead if this doesn't work? All the young sats stackers, keep your head up. Misinformation is the devil, don't get fed up. What teach you how to verify? Expose the lie. Go all in, do or die. Gotta survive. Clearer skies on the other side. You want it off the chain? This is off the chain. You want it off the chain? This is off the chain. Bitcoin is money. Yep. We say the same thing. Repeat after me. Cypherpunks write code, but I seen what you been writing and it ain't going in my nose. You can call it hating with your dangerous activation. Wrist splitting the chain, making it explode. Props to Luke for taking spam debate off kilter. I got 1,000 ways to hustle data past a filter. Don't get it twisted thinking that we're about the kids, but since you throw stones from glass houses, we know what it is. No need for a rejection client when yours flopped on its own. It's time to show some remorse for the sour seas you have sown. You want it off the chain? It's off the chain. You want it off the chain? It's off the chain. Bitcoin is money. We want the same thing. Reduce data? I don't think so. Everybody know how the blockchain grows. This supposed to be temporary. The next step gonna be even more scary. Threaten minors with lawyers all you want. You think you run shit and they know you don't. You don't get to choose who, what, and when. Fees ain't even high like back then. One last thing for you protocol attackers. From Craig Wright to St. Luke, on behalf of all sad stackers. Motherfuck you. Fuck you. You want it off the chain? Fuck off the chain. You want it off the chain? Fuck off the chain. Bitcoin is money. You don't want the same thing. You want it off the chain. You don't want the same thing.